All right, all right, all right. You are now tuned into the greatest, another episode of the Blackout Podcast. It's your higgity host with the Miggity Most, Black to the motherfucking fire, yeah. And today we have Mr. Quinton Green and Shandra Smith of Movement Mortgage. How you doing today, Quinton?
I'm doing well. How are you doing today?
I'm doing very, very wonderful. We had some technical difficulties, but thank God we got it worked out.
Yes, want to do it.
All right. Yes, it will. All right. So go ahead, since Miss Smith is not available with us right now. Go ahead and just tell us a little bit about yourself.
Quinton Green here from Movement Mortgage. I'm a part of the Shandra Smith lending team. Here, me and Shandra, we are lending partners. We are mortgage brokerage. So we do all of the traditional loans that everyone sees. And in addition, we can also do those loans that are a little bit more challenging and don't quite fit my apologies. They don't quite fit exactly within those conforming guidelines. So we are always here to help. I have been a mortgage lender for about 2.5 years. Definitely my goal is to help people become homeowners and their goals come true. For me and Chandra, our goals is to match everyone's short and long-term goals and, help and spread financial literacy as well as the concept of home ownership.
Okay, sounds great. Sounds great. Okay, so tell me this right here. What made you become a loan officer? Like, what inspired you?
So first, my background, my degree is in finance, but I always knew I wanted to help people. So definitely the number one tool that drives wealth definitely here is going to be home ownership. So what else goes better than wanting to help people, having a finance degree? You help people purchase homes by helping them qualify for loans. So definitely I always wanted to do something in real estate because it's a wealth builder, but helping people achieve their dreams is my goal.
Okay, awesome. Okay, so what does Movement Mortgage mean to you?
Movement means a lot. So definitely just going through it. Movement's like number one mission is culture. So we're all about uplifting everyone and supporting everyone. So our goal is to make sure that we can help and assist in any way possible and help anyone with whatever they would like to do. Whether it's purchasing a home, whether it's helping them find a new home, upgrading, refinance, anything of that nature. But we do not forget the aspect of a community because, it takes a village. So sometimes home ownership is definitely not a cookie cutter situation, but me and Chandra, we're always there to help our clients to the table.
That is awesome. That is awesome. Okay. So what was your occupation before you became a loan
officer? Student, but I also have a real estate investment business. I have another partner, he's a realtor. So I was doing that as well. So now I'm more of a full service. So I can help people purchase a home. I can purchase their homes. I can help people in any aspect. So whether they want to buy or sell, I love to do it all. So I try and keep my hands in real estate.
Okay. Awesome. So let's see where I'm at here. Okay, so before Movement, did you work for any other loan company before then, or is Movement your first one?
Movement is my very first company. So definitely everything I learned is from here, and they brought me in open arms. Most people in the mortgage industry, they require you to have experience. They don't like to train. But here at Movement, they definitely did a very good job as far as training and assistance and just onboarding itself to make sure that I can provide the best support to my clients going forward.
Okay. So tell me this, I'm gonna just piggyback a little bit on what you said with the training thing. A lot of issues with jobs is training. Do you feel like you have learned the most from being with Movement? Like you just learn, are you I know you probably still learning, but your training process, has it been like an easy thing for you since you just know this is your first company?
So training itself, it takes you through the process of getting everything together, getting a loan structure inside of our program that allows us to see what clients qualifies for. However, what training doesn't get you into is situations and different personalities of people just around. Because again, person at home is not going to be a cookie cutter situation. So I've learned my best training actually from Shandra. Shandra has been my best teacher when it comes to mortgages. She has definitely helped me on the people aspect and structuring a loan. We do loans that some people may not do at all. We sometimes have very tight loans, but our goal is to make sure we can get everyone who is qualified to purchase a home into a home. And a lot of times, especially people that look like us of color, it is very quick for people to just tell them no, or call me back in 6 months. I'm gonna call you, don't call me. So definitely throughout this process, just the ins and outs and making a loan fit and work together, Shandra has been the best teacher that I can imagine.
That is awesome. That is awesome. I think that a good trainer would just make your job, your life, your time being with them. If you decide to stay and retire, or if you decide to just move on to something different, a good trainer is somebody that you'll always remember. And I think that's an awesome, awesome thing that you learned so much from Miss Shandra. Okay. So which type of mortgages do people mostly get approved for?
Hey. Good.
Okay, so we are I was just asking Quinton, like, what type of mortgages do people normally get approved for?
As Quinton mentioned, we offer several different types of mortgages, but what we are most proficient in and what we offer the most is going to be the government loans. And so that's going to be FHA, USDA, and VA.
Okay. And I actually wrote those down as questions. And since you already brought it up, before we do that, I'm gonna go back. This is Miss Shandra Smith, y'all, and she is the owner, correct?
No, just the team. We're a team.
One of the team members of Movement Mortgage. And before we go into that question, I want to go give you the opportunity to tell us about yourself.
Well, I'm Shandra Smith, and I work along with Quinton. We've worked together for the last 2.5 years. I have been at Movement right at 4 years and been in the industry total about 6 years.
Okay.
So kind of new, but not new enough. You know, we're chugging away and just trying to get people in homes.
Yeah. Okay, sounds great. Now back to those loans. FHA, VA, and USDA. Can you briefly, either one of you doesn't matter, briefly explain not the ins and outs, more or less what those loans mean?
Yeah, sure. So FHA, that's the most commonly known mortgage out there. That is the Federal Housing Administration loan. That is a loan insured by the U.S. government, so it's more incentive for the loan product to be basically sold. Since it is backed by the U.S. government, that usually has more lenient guidelines. And one main thing is it allows the lowest credit score at 580, and it allows the highest debt to income ratios, meaning you can qualify for the most house with an FHA mortgage most of the time. And so that comes in 30-year fixed, 15-year fixed as well. The next one I would say is, let's go with USDA. That is basically the rural loan that is also backed by the U.S. Government as well. And so those are meant for rural designated areas. And that's a loan product that's 100% financing, meaning that there isn't a down payment. Every loan product does have closing costs associated. Every transaction, whenever you purchase some type of property, does. But for USDA, you don't have a down payment aspect. So that is also income driven as well. So you may not qualify, well, you won't qualify as much with a USDA mortgage, but it definitely helps those low to moderate income families in rural designated areas. And then we have our trusty VA loan. Definitely, if you're a veteran or if you do qualify for it, being in a special group such as like surviving spouses, meaning that your spouse was a service member who passed away from service-related injuries, you qualify for yet another 100% financing tool from the U.S. government, which is VA. And so that one is a lot more lenient. Their overall goal from the Veteran Affairs is to make sure that a veteran has a place to lay their head.
That's right.
So they have relaxed credit score requirements, and debt to income ratio is very relaxed as well. So if you do qualify for it, it's a great program.
Okay. So let me ask you this about that. With the VA loans, is the paperwork or like the application process, can it be hard for them to prove, like just say if the spouse isn't dead, but he's like handicapped, could they still get a VA loan for a home if he's just like handicapped?
Yeah, so as long as they're a qualified veteran, usually if you have honorable discharge or you serve usually more than 4 years, you would qualify. And if you're in any type of special event, such as any wars or anything like that, anything that wasn't at peacetime, you usually do qualify for a VA loan. So what we do is the veteran, and they'll know exactly what this is, they get what's called a DD-214 form, and that's going to list out everything they did with the military. And what that allows us to do is get what's called a certificate of eligibility. There is another document that spells out what they have to qualify for a home. Do they have enough eligibility to qualify for a mortgage within itself for VA?
Wow, y'all telling me some stuff. I thought I looked up some stuff and knew some stuff. I don't know nothing.
But and I'd like to add, at Movement, we don't have any fees for VA loans. So that's just one thank you that we have for active duty military and veterans. We don't charge any fees for those loans.
Okay, so to my audience out there, I know y'all ain't looking right now, but y'all gonna see this later on. Y'all hear that? Get the Movement veterans. I know a lot of y'all on my page. Okay, that is awesome. That is awesome. Let me see. How do you explain the loan process to a new client?
You want to check it
this one? What we like to tell them is that the process may not be super easy, but we will definitely guide you along the way. It is one of those things that if you're, sometimes people are like, is this it? I think I'm missing something, because they're so prepared that the process is super easy. Some people we have been working with for years, just coming up with a game plan of the things that they need to do to get into a home. So like Quinton said, and we'll probably say over and over again, it's just truly not cookie cutter how the process will be. So everybody's process is different. Depending on the individual and the loan program that they use. But the three things that we look at for all loan programs is going to be your debt to income ratio. So that's your monthly income compared to your monthly debts, your credit score, and then also your assets. So it's whatever you're going to put down payment, closing costs, all of that. With the debt to income ratio, that's probably going to be the most important portion. We'll get people that call us and say, my score's in the 700, 750. I know I can get a house. I know, and that's not necessarily the case. Hopefully we can get you in a house, but what we really look at is, are you truly able to afford the home? So we look at how much. So Quinton and I both make $75,000 a year. If he has a car payment and I don't, I would qualify for much more home than he does. That's kind of like the easiest way to describe debt to income ratio.
Yes, so the car payment would be an additional monthly expense that you have that will count against you to what you can qualify for. So
Right. Okay. Awesome. So back to what you were saying about the whole credit score thing, because us, we just like you said, oh, I got 700. I know I can get a house. And then that debt ratio comes, you be like, debt to income ratio comes, you be like, wait a minute. I didn't know I was in debt. So like, are people surprised when they got this 700 credit score? That's awesome. but when you count their debt to ratio, is it like a really disappointing thing for them?
It is. I mean, loosely just recalling one experience, like I came across a client that they were in the mid 700s, like closer to like 760. And then that same client also had 3 auto loans and didn't understand why they only qualified for a home at 125,000.
Right.
Like we now have to count those 3 auto loans, those cars against you.
Yeah.
And it does get kind of different depending on how long you had the loan and if it's truly your loan. Sometimes it can be excluded, but in that individual's case, like there wasn't an opportunity to exclude any of those debts. So now there was an $800 payment, a $500, and a $300 payment, all in cars that we have to count against you because they're all in your name.
Right.
So to add to that, don't co-sign for anybody. Don't co-sign for anybody's car at all, because it can actually hurt you truly. Even if they pay it on time, it can hurt you in the housing process.
Never knew that. See,
Yeah.
that's why I do this. Cause we need to know. Cause we didn't know. We thought we had a 700. We get it out, and we didn't know that we got a lot of debt. We can't get in that.
Yep, we get it all the time.
That's why I do this. Okay. What motivates the both of you to do what you do? Besides the fact that you love to help people, what else motivates you to do, to be a loan officer and get people in these houses?
For me, it is truly getting anyone in a home, but mainly people that look like us. Because we are underserved. Quinton kind of mentioned briefly, like we have done loans where someone has been turned away that qualified with no problems. So sometimes you just look at it and say, well, what was the reason that they were denied or not given a fair opportunity to purchase a home? So we look at everybody equally. We go to bat for our clients. So truly just making sure that people are able to get into a home, because that is truly the easiest way to obtaining wealth is through real estate.
Definitely. Right. I would definitely add to that. So we had the opportunity last year to help my own parents purchase their first true home. And my dad is a U.S. veteran of 22 years. And when he bought his first home, he knew nothing of a VA mortgage. That wasn't even offered to him. So for him to have an opportunity to upgrade and know and have financial literacy to know what loan products are out there and what he's actually eligible for, instead of someone just picking something for him. It gives you some sort of fulfillment, I would say.
Yeah. I know he's proud of you. I mean, he tell people all the time, my son got me this house. You know, my son did this for me. That's awesome. That is awesome. Okay. So have you ever had like a sale that was like really hard? Like it just vigorous, a long, a lot of just a bunch of time, just like you just felt like it was gonna never happen. Like you were hoping it was gonna happen, but it was just like, Jesus, every time you come, it's a bump in the road.
We've had a few.
We had a few, have a few, having a few.
Yeah, for sure.
Okay. Definitely. To just go back to what I said at the beginning, our goal is to make sure that if we know that someone qualifies for a home, our job is to make sure that they get in there. I can vouch for this. Shandra is a guideline guru. She knows for almost all the loan products out there that we offer, she know the guideline like the back of her hand, and she definitely knows the back for our clients over that. So if anyone has any question, she is a walking guideline.
That's awesome. That's awesome. Because I think that is very important, especially like with us, because we be thinking we be knowing stuff, and then when you throw something at us, we like, oh, wait a minute, and for you to just for somebody to come to you and just be like, well, Ms. Shandra, I got a question about this, and you can just recall it like that. That for me, I'm pretty sure anybody else, if you spending your money, that is an awesome thing to have. That somebody can just call off stuff on top of their head. They ain't got to think about, well, let me get back with you, or let me go find out. You already know what time it is. You can talk to me and tell me what's up right then and there. That is so awesome.
Yeah, so one thing I will add about that is, one thing to know the guidelines, but you have to put it in a situation, in a scenario. So for us, it sometimes can be challenging to put it in each individual person's scenario, because every situation is definitely going to be not going to be cookie cutter. So definitely, that's one thing that I love about partnering with Shandra. She's able to recall the guideline and apply it to the scenario fairly quickly. And that has definitely rubbed off on me. Not as fast, not as fast. Cause I tell somebody, give me a second, I'll be right with you. But that's one thing that she's very good at.
Well, I like to say, I don't know him off the back of, I don't know him like that, but if I do know one, I will go to bat. Like, I feel like, so I say like the underwriter, that's the person who makes all the decisions, truly. Mm-hmm. And what we do is package a loan up and present it to the underwriter for them to approve it. So kind of the underwriter is the judge and we are, I guess, defense attorneys. We have to go, so we are really trying to be Johnny Cochran and just make sure, we get it done. Yeah. So if it's not right, we will definitely show right here on page 1216, the guideline says this. So tell us why this doesn't apply to this borrower.
Right. Awesome. Okay. So does gentrification play a huge role in the loan process?
I will say
good and bad.
Well, I'm gonna just take it out of the loan process. I'll put it in the housing perspective. Mm-hmm. Gentrification has made homes very expensive for a lot of people who assume that one area costs this and has cost this all their life. And then gentrification makes the home price almost double. Mm-hmm. And it is definitely a price shock when people are looking for homes and then say, oh, this area is going to be cheap. And they've been renovating houses all down the block, building new homes and things of that nature. And they now realize that they cannot afford what they thought was previously known as the ghetto.
Yeah.
So that's what I would say for home prices, but loan value, loan aspect, what would you say?
Well, I guess I'm not really necessarily the loan, but I think it just depends on what side of the gentrification that you're on. So if you're on, if we have these homes that, like Quinton said, are considered the ghetto, and we've had these homes in our families for generations, and you sell it to the first person that offers you money for it, that kind of starts the process of the gentrification. Mm-hmm. So if we held on to some of this real estate, then we would be the ones that would be gentrified, keep being able to keep the money within our community, even if other people are moving into the communities. Like we could be owners as opposed to eventually having to be the renters.
Right.
Yeah. So, yeah.
Even on the positive side, just want to quickly add, like we had a set of clients that had a home in almost downtown Athens historical area. And they had it for a while, like 60, 70 years. Like they were definitely an elder couple, but like when they sold it, like they were instantly debt free. Like they were able to pay off all their debts and upgrade their home to 3 times the size of the home that they were leaving.
Awesome. Cool.
It's out there.
Yeah, that's awesome. See, I learned all kinds of stuff. Okay, so do you guys offer pre-approval and pre-qualification?
We really truly like to only offer a pre-approval. Mm-hmm. And I'll tell you why. So a pre-approval is basically, we look at all of your information. We look at your credit score, those things I mentioned earlier. We also look at the documents that support your information. So W-2s, pay stubs, tax returns if needed, things, bank statements. So those things will all get you a pre-approval. What a realtor wants is a pre-approval. So a pre-qualification is basically, hey, my credit score is this, I make $25 an hour. How much would I be approved for it? So it's more hypothetical. So it's just a piece of paper, literally.
Okay.
Pre-qualification is. A pre-approval is when we look at all of your documents and say, we will be able to get this person to the closing table and purchase this home. So most realtors do not want to move without the actual pre-approval as opposed to a pre-qualification.
Right.
Yay! There we go. I'm sorry about that, y'all. I'm gonna get it together. Okay, so I want to kind of go back a little bit. I want to go back to the down payment. Yeah, let's go back to talking about down payments again. I'm sorry.
Oh, no, you're fine. So we have, some loan programs have no down payment. So that would be USDA and VA. So since they're 100% financing, you would not have to have a down payment for those loan programs. And FHA is 3.5% down, and conventional is as little as 3%. It's a common misconception that people think you need to have 20% down for conventional, but you can have as little as 3% down.
Okay. And with the down payment assistance, how does that work?
It varies for each program. I don't know.
Yeah, definitely down payment assistance will vary for each program. What I will say is, first and foremost, there's no such thing as free money.
Right.
Definitely.
Right.
There is, in order for most down payment assistance, is for something.
Yeah.
So most of them, they will give you some type of grant or some assistance based on them having a second lien on your home. So what that means is that you'll get the first mortgage. Traditionally, it'd be like an FHA product, and sometimes it can be conventional. And then they'll put a second mortgage on your home as well, but it will come as a form of a grant. So they'll give you some type of assistance, but usually it'll be no payment that's due until you sell or refinance your home. And so definitely to qualify for down payment assistance, with those programs that do require a higher credit score, most down payment assistance that we use right now, they require at least a 640 credit score, and their debt to income ratio limitations is low, very low. So they want you to have less debt, and they want you to have higher credit scores to qualify. And most of them definitely are on needs based. So you would have to just prove that you don't qualify for another product, or you don't have the funds available to purchase with another product. But they're definitely out there. They just don't come free. That's what I would say.
Right.
There's always some cost to it.
Right. Typically have a longer closing.
Okay.
Yeah,
how long? Like how long?
Usually the whole home buying process is done in 30 days or less. Here at Movement, we definitely strive our best to get that knocked out in as little as 21 days or less.
Right.
But if we use a down payment assistance or a grant program, what that means is not only do we have to underwrite the loan first, we then have to, once we approve everything, it has to be packaged up and shipped over to the program that's giving you the assistance or down payment or grant itself, and then they underwrite the loan again. Like they go back and check and make sure what we underwritten was correct, and then after that they give you approval, and then it comes back to us. So that loan process can definitely, since it does add that third party aspect, it'll take longer than 30 days. We'd shoot to get everything wrapped up within 45 days, 40 to 45 days. But truly, we can't provide the turn times of any third parties at any given time, because it can change. It can change.
Okay. So I hear a lot about refinancing, and you see commercials talking about refinancing. Is refinancing a good thing or a bad thing?
Well, it depends. You never want to think of it as a bad thing. Definitely, like we spoke a little bit. So the home mortgage itself isn't always a permanent aspect. The average that someone stays in their mortgage is 7 years. So within the 7-year span, you have an opportunity for A, the market can improve and there'll be lower interest rates out there, or B, you have the opportunity of your home gaining equity, meaning that your home will gain more value than what you owe for it. So, and even a common third thing, you see a combination of both of those. So you'll have the opportunity to hence lower your payment, or you have the opportunity to get cash out of your home and into your pocket, or a combination of both. Or even you could reduce your terms. We had a client that refinanced last year, and they didn't want any money out. They wanted to keep the same rate. but they went from a 30-year mortgage to a 15-year mortgage, and they were 2 years into their home. So
yeah,
why not?
that's cool. That's cool. So I think that, you know, just from the commercials, you know, from what I've seen, you know, it's like people getting in hardships and they're having to refinance because of the hardship, and it is sad. And I mean, just off the commercial and it being sad, it sounds bad. But now that you have explained it to us, it's like, okay, it's not a bad thing.
No, it's definitely not bad at all. And I mean, you want to make sure whenever you make a big financial decision, you want to use it right. So again, owning a home is the greatest way to wealth. So I know professionals now that refinance their home every so often, but they use that cash that they pull out as leverage. They pull out their cash in order to make a down payment on an investment property, any other debt that has a higher interest rate. They'll take the cash out of their home and pay off the higher rate debt that they have. So that way it'll be lower. They'll be able to have more liquid funds. So you want to make sure that you do it the correct way. And, you know, it is available in hardships, but you don't want to make sure that that's the only time you do refinance. You want to make sure that it's beneficial in all aspects and not just an emergency. But however, the value of your home will be there because it is an investment. So in case of an emergency, you can always do that as well.
And that's why we always ask, what's your goal when you're refinancing? Because there are the different goals that he mentioned. And sometimes it's not always been, even the last couple of years before rates were higher, it wasn't still always beneficial for people to refinance. We had someone try to refinance that had been in their home for 20 years. By then they had paid, most of their mortgage payments were going towards the interest as opposed to the principal. So they were kind of refinancing would have made them kind of start over, and it wasn't beneficial. So that's one thing that we don't do. Of course, this is what we do for a living, but we're never going to put someone into a loan that isn't beneficial for them. We're not going to do it just so we can get the paycheck. We would never do that.
And we're really big on communication and transparency. So we're going to give you all your options that are available. If you have an option, you will know. And so that way you will be able to make the best decision. And we will just follow whatever you wish.
And the people that you call on those commercials will not.
No.
I was just going to ask that, like, how, I mean, does that happen where people just be like, well, trying to make some money, so I'm just going to throw you in some if you want it?
Yes. So
a lot of the regulations that are in the market now are because of that. And a lot of the reasons for the crash in 2008 were because of greed.
Predatory lending.
They
were preying on people who were not knowledgeable, weak, and vulnerable. And it ended up, people lost their houses.
And that changed a lot of our regulations now. So that's why we have the loan estimates and closing disclosures that are identical for every company, so people can truly compare apples to apples. Because what some companies were doing were basically, like you said, doing predatory lending and adding fees at the bottom, or places where people wouldn't know, balloon payments, prepayment penalties, things like that. And the average consumer doesn't know to look for those things. So where a lot of it came in.
But they held in the fine print.
So Shandra and I, we are really big on rescuing clients, basically, out of bad deals. So one thing that we're very good at is definitely that. So the first thing that we ask if someone is not feeling safe with their current lender, or they want a second opinion, we ask for their loan estimate. And so at that point, we then break down line by line what is different from our loan estimate and theirs. And so we'll be able to tell exactly what is different and what looks, you know, out of character, looks out of place. So definitely having something uniform like that we'll be able to do.
That's cool. God, Lacey, Jesus. I didn't know I knew it was deep, but I ain't know it was this deep. Good God Almighty. Okay. So when it comes to like the monthly payments, how are they calculated?
So your monthly payment is composed of a few things. The first thing is your principal and interest. So that is determined by your interest rate and the loan amount itself. The second thing after principal and interest is going to be monthly portion of property taxes. So whatever the county, the jurisdiction, whatever they decide is your property taxes is what you go by. That is something that I have no control over, and the consumer has no control either, because the government will take what the government wants.
They will.
The third thing is going to be a monthly portion of your homeowner's insurance. So that is one thing that you can dictate, because you can pick who your insurance agent is, what company you would like to go with. However, it does have to have sufficient enough coverage. You can't go buy a $300,000 home and then only get coverage up to $100,000 of the home. That is inadequate. And in case that ever happens, they will have forced place insurance as well. So, and that's something you definitely do not want to do. So when you have a home, make sure you keep homeowners insurance, adequate homeowners insurance on the property, or else your mortgage company will place mortgage insurance on you and it will be billed directly to you.
Wow.
Another aspect is going to be, depending on your loan product, it is going to be mortgage insurance. So with an FHA loan, with a USDA loan, you have mortgage insurance. Those are fixed based upon the loan amount itself. With a conventional loan, you have what's called private mortgage insurance, so PMI. So that is going to be based off the file itself. So it's going to be based off of how risky the file is. So that is just calculated per person. And then VA does not have mortgage insurance at all. So that is usually what is included in your payment. Sometimes if you do live in an area that has a homeowners association, we like to factor that in. It will not be paid through your escrows. However, we do consider that a monthly housing cost. So you want to be mindful. So like if you go see like a condo or a townhome, and you know, they're fairly cheaper because they're part of structures within itself.
Right.
You want to be mindful that like, hey, like you have a townhome, but they may like cut your grass and everything, and that may be an extra $150 a month that you need to factor in paying for your home. So you want to be mindful of things like that.
Or is it good to move into those type of neighborhoods, HSAs, neighborhoods?
You definitely have your pros and cons. It's going to be personal preference. HOAs are set in place to make sure that the neighborhood is held to some type of standard. Sometimes it does take away your freedom, but you pay for it. So you pay to have like some of your freedom taken away, but it sets some guidelines and covenants so that way nothing looks completely out of the ordinary. So that saves you from, let's say, if you bought a brand new home, from being next to a home that's completely made of tin. That's like got a shack basically. So and high grade. So it protects you from stuff like
covenants that they use.
Yeah, but then you also can't like build an extra structure sometimes when you want to, you know, things like that. So it's personal preference.
And how strict they are. I think that's the difference. Some of them are really strict, and some of them, you know, it's designed to protect the integrity and look of the subdivision
and value of the subdivision.
Right. So it's not necessarily a bad thing, but usually when you hear people that are so against them, they've had a bad experience in the previous subdivision before.
I've heard people talking about they can't cut their grass a certain way. If they zigzag it, they gonna get charged for it. If they paint something, they gonna get charged for them. Like, how they can charge you to not you if you want to paint your own house? That's weird. But I do understand because people get a little ghetto. They want to do some ghetto colors, and no, you're not gonna do that. So I understand. Okay, cool.
What I will say is with the HOA, when you purchase a home, you go under contract, that has to be disclosed, and they will provide you with where you can get the covenant. So I will say the covenants is just the guideline, the book, the rules of what the subdivision is. Sometimes they can get lengthy. The last one I read had 184 pages, and I gave up on page 2.
184 pages of what, rules?
Yeah, it goes over everything.
Oh,
The
wow.
covenant. So it'll tell you what you can do, what you can't do, if it's a certain time, if it's a certain day. But sometimes they can be as short as 10 pages, but they can definitely be lengthy. So when you purchase a home, it will be disclosed, so you'll have the opportunity to decide if that's something you want to do or not.
Right. Okay, so with inflation going on, has it been more difficult for people to get approved?
Yes.
Yeah.
Yes.
Now people still need somewhere to stay. When it comes with inflation, rent goes up. So when rent goes up, you got to find someone to live. So people are still purchasing homes. Again, purchasing a home is going to be a wealth building tool at any point in time. So it's definitely becoming harder. The cost of purchasing is definitely increasing, I would say, but that's not deterring everyone, because at the end of the day, you have to have someone to somewhere to lay your head.
That's right. That's definitely true. That's definitely true. How do you?
I think it makes you have to be smarter with your money. So one of the aspects that's really important is the debt to income ratio. So like you have to look at it. You, like you said, you have to have somewhere to live. So a lot of times people will not be as comfortable with these mortgage payments that we're having to quote now. Even people that can afford it. So if you can afford it, sometimes the reason why you may think you can't afford it is because of the other debts that you have. So it just makes people have to sometimes look at their budget and say, maybe I need to cut out this aspect of my budget if I want to be able to get into a home. Like you said, either buying or renting is expensive all the way around.
Yes,
so you want to, if you're trying to find a nice home in this area, you're going to pay
some money. I believe it. How y'all deal with rude clients? Have you had any run-ins with anybody just being rude and obnoxious and just I'd knock you out if I ain't need you as a client? Really? That is awesome. That is awesome. But I'd had some people on here that said, "Ooh, honey," I had to tell the artist. She said, "Girl, they try to be rude to me. I might dig in their skin." I said, "Ooh, girl." But it's awesome that y'all have never experienced any rude people, because people can be nasty. They can really be nasty.
We get frustrated people.
Right.
We get people that just during the process, because it can be challenging. And we had one guy who was frustrated, and he had one of the smoothest loans we ever had. And he said, "I just can't believe it closed in 20 days. It was smooth."
You only asked me for one additional document outside of what he provided.
He said he just thought he was nervous and he didn't know what he didn't understand. But
so his nerve was told before he even started the process.
Well, it's a long story. Some stuff happened after he closed that let us kind of understand as to why he was like that. But and it had to get some legal stuff had to happen. So it was bad.
Yeah, the elevator didn't reach the top.
Okay, we're gonna get ready to wrap this thing on up. Anything else y'all like to add? Anything else y'all want to tell us?
Even with inflation, even with the high interest rates, buying, if you're able to, if you can truly afford it, is going to, I won't say always, but typically put you in a better position than renting. Basically, as you sleep every night, you are becoming more and more wealthy. You are basically earning money in your sleep. We have people that closed 2 years ago that either refinanced or sold with over $100,000 in equity. So this, that's truly, the numbers are there. It's not just something that we're telling you. So if you are in the position or think you're in the position to buy, I think it's something you should definitely visit and see, what you can do to get into a home.
Right. Because definitely our goal is to help you become a homeowner.
That's right.
So what I would say about that is, Shandra, can you tell the people what's the interest rate of renting?
100%.
100%. So regardless of what the interest rate is today, it can be 5, 6, 7, 8, 9%. But however, you would pay that towards your mortgage into your home. You make that payment, it goes towards your principal, goes towards your interest, and the difference between that is equity. You'll get equity. You can't get equity renting and paying someone else's mortgage. It just doesn't work like that.
It don't. It's sad. I'm sad.
No.
I like to add one more thing.
Okay.
So kind of going back to the gentrification, your first home you purchase does not have to be the 5-bedroom with the pool, side entry garage, all of that. Like that's what a lot of people do. So you don't have to buy the biggest, nicest house on the block.
Right.
You purchase a home, a nice home for you and your family, stay in that home 3-4 years, go to your next home. If you look at the patterns of people that have obtained wealth through real estate, that's how they do it.
Yeah.
So sometimes don't be discouraged if you have to, I have to have that 5th bedroom. So since I can't get the 5th bedroom, I won't buy. That doesn't necessarily make the most sense. You can just get the 3-bedroom and then, so that's my 2 cents on that.
Okay. I do want to ask you about bankruptcy. If a person is coming out of bankruptcy, or if they even had a situation where, I had a friend of mine that was in bankruptcy and their bankruptcy got dismissed and she tried to buy a home after its dismissal, but she had some issues. How does that work?
Well, when it comes in that process, I would say dismissal and discharge will be viewed as the same because you started the process of the bankruptcy. However, just because you have a bankruptcy, or even in some aspects, I go over that too, even if you're in bankruptcy, you could still purchase a home to a certain extent. Just to briefly go over it and quoting FHA, if you are in a Chapter 7 bankruptcy, you would have to wait 2 years after your bankruptcy is discharged or dismissed. And that's called the seasoning period in order to purchase. However, if you have a Chapter 13, as long as you have made 1 year's worth of payments, on-time payment, and you get approval from the bankruptcy court, you can purchase a home. You can purchase a home in the middle of the Chapter 13, or even if it's discharged, as long as you have made the 1 year's worth of payments on time and they give you the okay that you can purchase.
See, they know that. Awesome sauce, man. Awesome sauce. Okay.
But one thing that's really important, a bankruptcy is kind of like a fresh start. So sometimes we talk to people and they're discouraged because they have the bankruptcy. Don't be discouraged because of the bankruptcy itself. It's what you do after the bankruptcy. So make sure after that bankruptcy that you are very diligent, don't pay anything late. And as long as you do that, then it's not truly that big of a deal. As far as being stopping, but just make sure you establish, get new credit cards, a small loan or something like that, so you can reestablish your credit.
It may be a tad bit difficult to purchase a home if you're currently on your 3rd bankruptcy in a given amount of time. So you want to make sure that it's not about before, it's about what you do during your bankruptcy. You pay everything on time, and what you do after your bankruptcy. You pay everything on time and manage your money so it doesn't happen again.
Right. Awesome. Okay. Individually, who is your biggest competition?
Me.
Awesome. Okay. Now we're gonna go ahead and get ready to wrap this thing on up with you guys. I definitely appreciate y'all for stopping through. I want y'all to get some shout outs.
First, we would like to thank you for having us, because without you, we wouldn't be able to share this material. We wouldn't be able to be out here, and just thank you for all you do in your podcast. It does enlighten a lot of people on a lot of different subjects. So just the transparency and what you give back to the community, that is awesome.
Thank you so much. I'm so happy. Oh my God.
Yes.
Okay. Shandra, you got no shout out?
I would like to shout out definitely Quinton, of course. We talk, you can ask anybody. We are literally on the phone every day talking about loans, day in and day out. Like I really don't know. Not having him as a partner, I couldn't imagine, because we oftentimes have been called, maybe some people may say we're nerds, I don't know, but
ain't that wrong with that?
ain't that wrong with it. So we will talk about loans day in, day out, but we really truly want to get people into homes. We have a really good operation system. Really good support system here. We have a loan manager, Emily, that is a rock star.
Shout out to
And
Emily.
yes, and our operations, certain underwriters that we like a little more than others. So without them, we wouldn't be able to get these people into the home.
Right, and our wonderful referral partners. We have a group of loyal, trusted, licensed real estate professionals that trust us with their clients day in, day out. We have awesome insurance agents that help us with the best and most affordable coverages for our clients. So without people like that, we wouldn't be able to get it done. And most important, we have a wonderful attorney, the attorney's office.
Just one.
But she is hands down the best attorney ever. If y'all are ever in the need of a real estate attorney, please visit Autumn Triplet of Quarterman, Hodson, Triplet, and Leach.
Yes.
And that is in Watkinsville, Georgia. They hands down can get anything closed. They're
awesome. Fast, efficient, knowledgeable.
Right.
Yep.
Yes. Awesome. I'm so proud of us, man. I'm proud of y'all. I appreciate y'all for coming on here and just dropping their knowledge. Cause like I said, a lot of us been confused about this, that, and the third, and then we got y'all on here to tell us what the real is. All right, so give your social media information for anybody that might want to, come holler at y'all at Movement or holler at y'all individual or got questions or what have.
Yeah, I mean, hit us up anytime. So Shandra and I use our personal numbers. So if you do have any mortgage questions, feel free to give us a call or text. I'm 706-424-8891. Feel free to give me any questions. My email, Quinton.green@movement.com. That's my email. Feel free to contact me there. I am Q. What's my TikTok? I always get the mixed up. No, it's Q the Mortgage Main at TikTok. I'm gonna change it, but I mean, I put some real nice videos out there for mortgages too.
Yeah.
But we are always here in any fashion, any form. We're located at 525 South Milledge Avenue, Athens, Georgia, 30606.
Very nice building. On
the corner of Baxter and Milledge, next to
very nice building.
Yeah. And we'll answer any questions you got.
Awesome. Cool.
He'll let me know that you contacted him and we'll get him together. He gave all his information.
I don't know her phone number like that. I just hit, but you can contact Shandra.Smith@movement.com. SHANDRA.Smith@movement.com.
And my number is 706-202-9902. Pretty simple. And we do have a team email too. Yeah. It's Shandra Smith team@movement.com.
Awesome.
On Facebook, Instagram, all that.
Yep.
Okay. Awesome sauce. I definitely, once again, I'm so proud of you guys. Just meeting y'all. This conversation we had has been totally awesome. Thank y'all so much for coming on with me.
Thank you.
I really appreciate it. I can't wait to get this thing edited and put this thing out, honey, because if people wait on y'all, you hear me?
There we go.
Hey, yes.
The block is hot.
Yes. We're gonna go ahead and go on out this thing. Again, you're tuning to the greatest episode of the Blackout Podcast. And you know my motto. If you ain't about it now, just forget you later. Peace. Thank y'all so much.
Thank
you.